Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Looking at YELP GWPH PCLN NVDA and TSLA. So YELP formed a bullish reversal doji to end the week, and we have to see a green day and the 200-day moving average back as support on Tuesday in order to confirm that candlestick and look to try and reverse this trend. After a failed bounce attempt, which ended up being a bear flag for continuation to the downside, we're going to have to see the bulls get over the high of that bounce attempt of 36.75 in order for them to prove anything to us. Otherwise, a short-term bounce anywhere below 36.75 is just another lower high and a weak bounce attempt. So on the weekly time frame, we had the higher low pattern broken here, 34.62, and we did break below that. We closed above it by 5 cents. So the close did still maintain that support. That's the one thing that the bulls have going for them. Other than that, they must see the bulls show up this next week with a bullish reversal candlestick, still maintaining 34.62 support. Otherwise, we're looking down at 32 even, and that will lose the strong uptrend, and it's pretty much a double top where we had 43.36 and up to 43.41. So 5 cents higher, certainly not significant, and it is a bit of a concern for the bulls, the fact that we have that double top and then the dump in reaction to earnings. So bulls need to follow through on Tuesday to confirm that candlestick, and then we'll be looking at exponential resistance as well, which rejected the last bounce attempt. The 4 period is down here. That's going to be in the upper $34 range. GWPH, normal healthy consolidation going on. It looks like a bull flag, and I can say that because the bulls are buying the dip with lower wick showing that, and because the volume is very low and it's decreasing for the bears. So after a big time breakout, looks like bull flag consolidation before continuation to the upside. Bulls still in control and happy on GWPH. We are rejecting from the weekly upper Bollinger Band resistance, currently 132, and it is a little bearish reversal inverted hammer from that level. So the bulls are going to have to follow through and see a nice move to the upside. Key support is 126.75, the low of this little consolidation before continuation. And if we break 130, make that 126.75, then this will no longer be a bull flag. So important for the bulls to maintain support, but with the way they bought the dip on Friday, it does look like the bulls could show right back up to start next week and look for continuation to confirm that bull flag. PCLN confirming the bearish reversal candlestick coming off the all-time high from Thursday. And on Friday, look at the increase in volume. So that does favor the bears. The key levels that I'm looking at now are the low of the last little consolidation of 16.28, and then the all-time high up at 16.59. So a break of 16.28, and we'll look to the daily middle Bollinger Band after that, but that will indicate that the bulls need to consolidate for a while before we get to a new all-time high. So 16.28 is a key support, and the bears are liking the potential for some further downside if we do break that 16.28 level. The weekly time frame is a bearish reversal candlestick, and we did lose the upper Bollinger Band support, and that's now happened twice. Let's zoom in here. But we broke above the upper Bollinger Band on 2 candlesticks, and the preceding, or I should say the following candlestick, could not keep that level, and we're consolidating again. So still very healthy for the bulls. If we see the market consolidate, the correlation with PCLN and the S&P 500 has been fairly strong. So market consolidation, and we will look for PCLN to consolidate as well. So 16.28 on close watch. NVDA holding the 50-day moving average support for the second day in a row. It's a bullish reversal hammer with a close up near the high of the day. Same thing here. The bulls have to get above the high of the last bounce attempt, 110.15, for them to prove their strength to me for some follow through. So we need a green day to confirm this reversal hammer from Friday. and then we need to see a break of 110.15 for the bulls to prove themselves. We held the 8-period exponential weekly support by pennies. It has been holding for a year. We have now bounced off of this level about 7 or 8 times, and if we lose it, we are going to look for further pullback, and I do believe we are still going to lose it because of the size of the bearish volume on this pullback. The bearish MACD cross is on the verge here, and we're going to have to see the bulls show up and get back over those 110 levels in order to keep this level this coming week. Tesla also consolidating, but the bulls buying the dip on Friday and closing up near the high of the day. So this too could be a bull flag of consolidation. Middle Bollinger Band support is going to be in the low 260s, and that will be the first support level that we do look to if the bulls are unable to continue to the upside. But as of right now, this daily chart is nice, healthy consolidation. 280 and 287.39 are the two resistance levels on Tesla. And you look at the weekly time frame, it is a big time bearish reversal candlestick on the weekly time frame. And we look back at the history of Tesla and we put our resistance line right on 280, and we have rejected from 280 3 different occasions in the history here. The all-time high we couldn't close above 280, another attempt back here, and this is the 3rd time we've been unable to close above that level on the weekly time frame. So a big bearish reversal candlestick on the weekly. A red week will confirm it. So pretty much for Tesla, the question is going to be, is this a bull flag of consolidation ready for continuation? Or are we going to lose this middle Bollinger Band support and be looking down at the low of the last consolidation down in the 247s? So it's an important week for the bulls. They do have some momentum heading into the start of the week because of that strong close on Friday. And if we head back up to 280, we know the bulls have some momentum behind them. So I appreciate you watching. We'll check back in after Tuesday's action. See you then.